Joining me now is Sarah Foster, economic analyst at Bankrate. Welcome to the show.
Thanks for having me, Ashley. It's great to be here.
All right, so the longest government shutdown in U.S. history, 43 days, is over. We're going to be seeing September delayed jobs numbers on Thursday morning. What do you think that report's going to reveal?
It's better late than never, I'd say, but it's still not the full picture that we all really need right now. The September jobs report was just about finished right before the shutdown. And since then, we've really gotten some private sector data that's kind of raised some alarm bells. That Challenger Gray and Christmas report from October, it showed the most job cuts for the month in over 20 years. A lot of us are really trying to figure out whether this labor market is transitioning from that frozen, no hire, no fire state into something similar to maybe a no hire, start firing. Of course, we can't really confirm that. Private sector data is great, but it's no replacement for those government statistics. We're waiting to hear, of course, TBD on the October jobs and CPI report as well.
All right, and how does a data blackout like this impact the economy?
It has huge implications for policymakers, for business owners, and for consumers. On the policymaker side, I'm thinking about the Federal Reserve and how we've seen more officials come out and start talking about how they aren't so, they don't really feel like they can cut interest rates in December the way that they thought they could a few months ago. We've also started to see, on the business owner side, without that data, we really need that to make decisions about the future. We run a survey at Bankrate that found that 42% of Americans over the past 12 months didn't get a pay increase, and that had been increasing from 36% in the year before. That was, of course, because of a slowing labor market, but if we don't really know what's happening with inflation, with the direction of the economy, companies find it really hard to plan. And of course, we know that many Americans are still struggling under the weight of inflation. We track real wage growth since the end of the pandemic. We find that there's still a gap, so any pay increase will help Americans catch back up to all the purchasing power that they lost.
Are you able to dive a little bit more into how this blackout can impact the average American? I know you mentioned business owners. What other impact can it have?
Well, I think especially on the interest rate front, if the Federal Reserve can't cut interest rates, we're still kind of stuck at a near decade high on many borrowing costs. We've started to see some of these interest rates come down as the Fed has cut interest rates a full percentage point and a half since about last year. But that's been kind of a modest, decrease here. Credit card rates have come down just enough to maybe save borrowers who are in debt about $1 a month. Auto loan rates, they're still so expensive that, with the average balance, many Americans could still find themselves paying about $800 a month. Those are real impacts to Americans, finances, their purchasing power, their budgets, and of course, with the holiday shopping season coming up, as many Americans start to find themselves stretched, especially in that middle income bracket, it could have other consequences too for spending.
And as we know, trader confidence in a rate cut in December has decreased almost 50% over the past month. What are the pros and cons of an interest rate cut, in your opinion?
Yeah, well, the Fed right now is really caught between a rock and a hard place. Cutting interest rates could help this labor market. It could cushion it from maybe transitioning into that low hire start firing scenario. But at the same time, what's good for the labor market could also make inflation worse. So the Fed is really kind of figuring out this, stagflation light, what to do about it. Something that has really stood out to me is we've started to see some more dovish members of the committee, thinking about Minneapolis Fed President Neil Kashkari, Chicago Fed President Austin Goolsbee. They're starting to kind of change their tune a little bit. Austin Goolsbee kind of compares it to driving through the fog. When you don't really know what's happening in the economy, when the data isn't really giving you a clear picture, it's prudent to slow down and move carefully. Now, that's not to say that the direction of travel has changed. I think the Fed, broadly speaking, is moving more towards a neutral rate of interest, but how quickly they get there is the ultimate question.
And when they're making these decisions, what criteria are they weighing?
Well, they really need to see data on the labor market. The Fed has a dual mandate, stable prices, maximum employment. They want to make sure that everybody who wants a job can find one, which is, not something that I think we can really say about the labor market at this point. We ran a study at Bankrate that actually looked at how the labor market was performing before the federal government shut down. And we found that many job seekers, and even not just unemployed Americans, but people who are wanting to find a position, maybe stuck at a place they don't like, It's difficult to find a job right now as it is in recessionary periods. Typically a 3.2% hiring rate, which is what we are at right now, is correlated with a 6.8% unemployment rate, which obviously is far higher than what we're seeing right now. So they need data on the labor market, they need data on inflation, and of course another big question with the shutdown is what's going to happen to those lesser priority reports, specifically the JOLTS report. Where will we be able to see whether layoff rates and hiring rates are actually changing?
And you mentioned recession. I understand that you do not see a correlation between the weakening labor market and a recession. Can you elaborate on that in the last minute?
We describe it as a jobless boom in our latest report. So, we are moving past this period where companies are actually growing their profits by expanding. Instead, they're actually looking twice at payroll, thinking differently about how many people they want to hire, and investing massively in intellectual property and artificial intelligence, productivity-enhancing technologies. So we looked at that, GDP growth to the second quarter of this year. Historically, it's correlated with 264,000 jobs added in a month when you see the economy boom that much. Of course, though, our latest data from August showed just 22,000 jobs added, a big difference there.
All right, excellent insights. Thank you so much, Sarah Foster, economic analyst at Bankrate. Thank you for joining us.
Thanks for having me, Ashley.